snap your fingers, just like mental framework or things like that, your psychology. These aren't things you just snap your fingers and get really, really good at right away. If you'll focus with me, if you'll do things like I asked, to go through and find examples after each lesson on your own, share those within the community so that you get feedback and difference of opinions or confirmation. Yes, I saw that one too. That was a great example. What about this one? It didn't work, blah, blah, blah. That is how you really, if you'll listen to me, if you will take this step at a time rather than getting to the end of the course and trying to just apply it all, which is the tendency. You're going to hear so many cool things. You're going to want to go do those cool things. Let's go talk about another performance activity. I don't care if it's football or golf or chess or whatever. You can't go do the amazing things as a beginner. You have to try to learn in a sequential order. You have to build those house of bricks, and really and truly you need a little bit of confirmation along the way, which is why we do mentoring and things like that at Apteros, is because people need to be forced, essentially, unfortunately, to follow a path. They need to be held accountable to things. They need to have peers that you bounce ideas off of and develop alongside and see good and see bad. And quite frankly, and I know I'm sidetracked here, this is why the desk is so cool. This is why, number one, our community is so cool. And you take it to the next level on the desk, you have that environment with those things. So let's get back to it. Let's keep going. All right, no more rabbit holes. Tools we're using, cumulative delta. We've already gone through this in the accelerator guide. We have now kind of really defined it, even from a mathematical point of view. And you now understand really what it is buyers and sellers kind of duke it out, and there's aggressive and passive participants for every trade. Let me see what's next. Yeah, let's consider a single price bar. Let's just say it is a nice little up bar. Okay. Well, really, it did this, and then maybe this, and then this, right? You could look at this bar and 90% of the public out there just sees it and they say, oh, green bar, bullish. But what happened on that bar? How did that bar come to be? What was the underlying order flow that happened during that bar? It could be, if we think of it from a delta perspective now, I'm just going to draw some deltas that correspond to this bar, which would be underneath it on the delta. It could be super strong buying, a bunch of offers being hit along the way relative to how many bids were hit along the way. There's always going to be both. Markets don't move in a straight line. But the net result, that's what delta is. A bunch of buying. Super strong buying in this fact. Above average buying. What if it was something more like this, where the delta did this during that bar? Might just be normal, right? Okay, market went up, or in this case, the bar went up, and there was a decent amount of delta behind it, which is kind of normal for a bar of that size, a price movement of that size. What about this? Uh-oh. If we think back to analyzing price movement, this would be kind of weak momentum, right? Here's kind of a real impactful signal. Because why? Because it's different than what the bar tells us in terms of just price alone. Price says, hey, look, big bullish bar, awesome, bullish, going higher, going to the moon. Order flow says, There's an underlying problem here. Caution, not as strong as it might be perceived from price alone. What about this one? Here is where people, their heads explode. Price can indeed move up on net negative delta. We'll talk more about that. But for now, that might be a brain teaser for some of you. A lot of you advanced guys in this course already know what that is. Claude says it's happening. We read both price and delta together. It's nearly, not totally, but I'm making a point here. It's nearly worthless to just look at price or to just look at delta. What's really valuable is to look at both. That is what's really valuable, right? So if we have, and keep in mind that how do we see price? Mostly is via rotations. So that's important to remember. And so we're essentially going to look at, we're always going to be considering what is price doing and what is cumulative delta doing at the same moments in time. Oh, look, an up rotation. Oh, look, an up rotation. Oh, look, a down rotation of the exact same thing. Oh, look. What's going on there? We'll talk a lot more about that. A great advanced question we'll go ahead and get to from Stephen is, hey, how does rollover affect our read on delta? It's a great advanced question. And the fact that the truth is that it makes delta more sporadic and less reliable during those times. And that's just an important market mechanic to be aware of and know. As we enter rollover, there's a lot of what I call synthetic order flow, right? A lot of fake order flow. You'll have people selling that are not actually selling, they're just rolling over, these longer term players, right? Things like that. So, an idea I've had in the past is that, you could kind of maybe come up with some really smart ways of seeing some of that during those times and potentially even coming up with a really powerful, it's rollover time. Here's what we can do with order flow. I've not put work into that or done that, but hey, maybe some of you come up with something like that if it's possible. But now you can't just say you're selling the current month and buying the next month, because why? Not everyone's long those markets. You might be short that market, which means you buy the current one and you sell the next one. So you can't just track it from don't go down that overly simplistic way. But anyways, we read them together, guys. We look at each of them. We see what is it doing, and what is delta doing, and we kind of get a sense of relative movement. And ultimately, where we arrive with a lot of these reads or insights is where things, I wrote a nice little fancy word there, but that's not what my Alabama roots say. I say get out of whack is what I say. But my students know, where did things get out of whack? They say, oh, hey, Merritt, I see this right here. And I say, well, that's not exactly the read, because things got out of whack just before then. So even when we read, we can't always just take in isolation of everything that happened, okay, with price and delta. You can't just zoom into one little piece and say, oh, I've got XYZ big read because this versus this. And I'm just talking high level here, guys. We're going to get into the details. So don't worry. The fact is that we have to look how we came to be there. We have to go left and we have to go find where did things get out of whack that brought us to this point. And then we have a deeper order flow analysis insight as to what the truth is about what's going on at that point. Very, very powerful stuff here. And we're just setting the ground floor here for beginning to understand this stuff. And let's keep in mind, there's plenty of times where things are moving. Remember what we talked about, what is normal. Things are just moving normally. There's nothing that's out of sync. There's nothing that's out of whack. All right, what we're going to do is we're now into the second chapter, which is the contextual order flow signals. We have 3 of them. And then after that, we're going to go through the shorter term order flow signals. Number 1 is delta neutral. Number 2 are what we call contextual order flow shifts. And number 3 are some major absolute inflections. We're going to kind of start theoretical, and then we'll go to charts and see real stuff. Delta neutral. Delta neutral is such a simple and cool thing. And unlike everything in order flow, it has real rationale behind it, in my opinion. So what is delta neutral? Delta neutral is 0 line of cumulative delta, which if we go look at the real chart, right? 0, got this thick line there. It's simply, where are we relative to that? And a delta, really, I should have written this as a delta neutralization, because that's really the key event. A delta neutralization, as we'll get into, is really where there is a move that comes back to test neutral, most powerfully after having crossed neutral. Neutral is being 0, right? So a good question here by Alan. Isn't delta neutral used a lot in options trading to avoid, different risks or whatnot? Yes. I've actually never really thought about how that's a, delta neutral. And that's why I really should change this slide. Delta neutralization is what we want to really refer to this as. Delta neutral, on the other hand, is what options traders do to hedge their delta in options positions with typically outright futures or other options or whatever, which is by no means a part of this, what we're talking about here in this course. Delta neutralization is really where we are inflecting with this 0 line. So this would be a delta neutralization type event here. It just never stopped. We just ran through it. And let's just say that this one, works in a sense, right? The sellers respond from this potential delta neutralization point. And as I mentioned, what happens leading to this moment in time where we have this delta neutralization matters. And I would go back to over here where we were above. So maybe there's something I should have said to start this particular talk, which is we're bullish above. This is contextual order flow, and we're bearish below. And then as there are shifts between who's in control, bullish and bearish, like right here, We have delta neutralizations, which are retests of zero. I apologize. I feel like it was a little messy the way I taught this here. But hopefully we're all on the same page. Questions are open if there's any questions. AJ's asking, are we essentially going to be scalping off of one chart and one preferred time frame? I'm going to leave a lot of that up to you. The way that I'm going to teach this course, the answer will be yes. I have the sense that most people are likely going to incorporate some form of other time frame. But this course and teaching you that you can do it on one time frame, that's how we're going to approach it. And we're going to get all into that. In fact, one of the things we're going to talk about today is context and bias, and we're going to talk about that a lot. For delta neutral, does it have to happen from the start of regular trading hours, or would you track it from a key swing or turn in the session? I don't follow that question entirely, but I think my answer will cover any question you might have. It doesn't matter when or where it happens. And in fact, hopefully this was in the accelerator guide. If I recall it was. I believe that you guys should set your charts to begin. It's very important. It's super important for multiple reasons we'll get into through this course. Your chart session time needs to begin where all the indicators such as delta neutral or DVA need to be calculated from is very important. And it needs to begin when the exchange reset happens, when the session opens, so that we can calculate, spoiler alert, delta neutral and delta neutralization is a form of inventory, a clearing out of inventory, a shifting of overall net inventory, which harkens back to a concept from prior chapters in this course. So it's important to have those charts set up correctly, and then it's important to look at these things. So it's pretty simple. I mean, guys, I had planned to talk about delta neutralization weeks ago, right? As I finalized preparations and outlines and everything for this course on this day, on Tuesday of this week when we were going to talk about this. Look at this chart. Look at today's session in real time. This is not, it's so important that you guys realize this. And that's why I don't know if you've noticed, but I have essentially zero cherry-picked, picture-perfect examples of anything in this entire course. It's concepts and tactics and skills and ideas and real-time charts. Now, we're going to scroll through because we'll have to sometimes to find examples, which maybe is the same thing as the cherry-pick stuff, so I'll shut up. But it just goes to show how powerful these concepts are. This one is messy, but it's still the concept. Areas, not lines, is an important topic. This pit session, guys, has been defined by delta neutral inflections. Delta neutralizations. I don't even know what to call it. Doesn't matter. You get, we use DN. I'm so used to using DN, I forget if I should actually, these terms that I coin. Anyways, we're bullish above. So remember, this is contextual order flow, guys. We're bullish above, we're bearish below. And we really like the delta neutralizations that happen with the actual inflection of zero. It could be from above, which is a bullish one. It could be from below, which is a bearish one. Yeah, maybe we could change the term delta zeroing. I like the concept of neutralization because it connects us and reminds us, at least psychologically, inventory, and that there's real reasons behind why some of these things work. It's not just magic dust, Okay, let's proceed. Oh, one thing, one thing I have in mind here to remind you of is that the best delta neutralizations are kind of what we call fresh ones. That is, bulls have been in control, and now this happens, right? And by this happens, this right here, which is a move below neutral, and there's the neutralization, which is a bearish one. And the fact that that happened after all of this, oops, tried to change colors, didn't work.